All right. Can everybody hear me? We're going to pull up the chat. Cool, cool, cool. So, honestly, I'm not entirely sure if the stream is even on. But it seems like it is. So, welcome to the stream, guys. Today we're going to be going over the conference call that Lordstown Motors is going to be putting out shortly. We're also going to go over the technicals real quick, and we're going to go over a bit of news. But in the meantime, thanks so much to whoever subscribed recently, because I was at 666 subscribers. So it's just good to see that we're not, praising Satan anymore. And it's probably a good sign coming into earnings. I wouldn't want, Satan really being the one controlling it. But, all right. Let's look at that ride stock. Yeah, okay. Looks like it's picking it up. Cool. So, today in the live stream, I'm really hoping that they're going to be talking about Lordstown Week, which it's going to be in June, I believe, June 21st to the 25th. And that's going to be where they open up their factory, talking about, exactly what their prototypes are doing. They're going to be test driving. They're going to be doing breakdowns of the actual vehicles, as well as just showing people around the factory. So that's going to allow all shareholders and all potential consumers or customers to actually come in and understand where the vehicle is made. Because if you're going to buy a truck, you probably don't want to buy it from a brand new OEM. So it's awesome to see them actually taking this step. And for those of you who don't know, I did make a change.org petition shortly before they actually went ahead and posted that Lordstown Week news. I believe we got 98 signatures. This will load in a second. But it was basically asking for the same thing. I was asking for some form of transparency. And, that's what they're giving us. So I'm super excited about that. You can see that's going up. It'll go up to 98. But yeah, now the change.org petition is pretty useless. But let me know how the stream is going. Because I'm getting a warning from YouTube saying the stream's current bitrate is lower than the recommended bitrate. Ooh. So it seems like Lordstown Motors put out their earnings a few minutes ago. Actually sold off pretty aggressively, all the way to $9 per share. And my computer is lagging. Oh, well, now we're pumping right back to previous levels. Alright, it seems like we're getting some buffering in the stream. Dude, that's awesome. They provided 48 betas, or produced. Alright, cool. I'm going to go to financial filings. And their quarterly filings. Let's pull that up in a PDF. Sweet. Okay. What is this? It's not quite what I want. Oh no, I want the quarterly results. Sorry about that, guys. Alright, so here's the press release. I'm so sorry about that. Alright. Alright, so let's look at the technicals in real quick. Because somebody posted in the chat saying that they are delaying production. So if that's the case, that's going to be pretty bad. Let's look at the release. Outright to be by, okay, 115. Net loss 125. That's kind of what we expected. You know, it's kind of similar to their last quarter, and then their cash position just went down by that amount. So yeah, they're just burning through cash. That's exactly what we expected. 48 out of 57 prototypes, and will begin pre-production in July. Gotcha. So that's, it seems like we're still on track. We have passed 2 of the most difficult crash tests, frontal and pull, and vehicles are performing as planned during other durability and validation tests. We continue to expect what we achieve, that will achieve a 5-star crash rating. Now, having an electric vehicle and really setting up the base in a way where all the weight's in the bottom, and then you have that front trunk to really pad the front, electric vehicles really have an advantage when it comes to crash tests. And so yes, Tesla makes the safest vehicles in the world, but a lot of that is actually attributed to they make electric vehicles, and those are safer than gas-powered vehicles. So 2021 objectives and financial outlook. Yeah, so it looks like Lordstown Motors stock actually sold off all the way to about $8.80. That's almost $1 from where we were today. Let's see if that returns or if we keep going lower. Expected endurance production in 2021 will be limited and would at best be 50% of prior expectations. Okay. That's terrific. That's actually terrific, because I did a price prediction video and I actually put it at about 25% of what they were predicting. And here, I'll actually pull up their production numbers, or their production targets, excuse me. It was this. So they are basically saying that they will build 1,000 vehicles. 1,000 vehicles in 2021. That's massive, because nobody believes this. Nobody believed that 2,000. I'm sure nobody believes that 1,000. But if they reiterate after having built 48 betas, passing the crash tests, and like just doing well throughout the quarter, this is awesome. This is big. I'm actually quite excited for this. Keep in mind, the lower, in my opinion, that the stock price goes before Lordstown week, and people actually understand that this company isn't a scam, or that, you know, it's very unlikely that they're a scam because they have $600 million in cash, $3 billion factory. They have all the testing that they're doing on their vehicles. They're actually passing all the requirements. This is big. And I wanted to say, for those of you who don't know, there is an 80-mile-per-hour top speed on the Lordstown Endurance, and I wasn't sure why. However, somebody from the comment section in one of my videos was ever so kind to tell me that he worked in the insurance industry, and the reason for this, that they said that it's for insurance purposes. Because if you put a top speed for commercial vehicles, because that's, you know, they're aiming for fleets and commercial uses, then it's going to lower the cost of the actual insurance, because the people driving your vehicles won't be able to drive them at reckless speeds. So they're going to be able to save a lot more money that way. Let's see what you guys are saying. Yeah, so the 50%, limited production, that's actually crazy to me. I thought it was going to be much less, because 2,000 vehicles in 3 months for a company that's just starting, even 1,000, if they can achieve this, that'd be huge. That'd be huge. Right now, we're not even pricing this company for the price of their factory. Here, let's look at their actual market cap. And so the market capitalization, that's the total valuation of the business. Keep in mind, we have 600 million. So we're about valuing the company at $1.1 billion if you subtract that 600 million in valuation. And that's a third of the valuation of their actual factory. So keep in mind, the actual vehicle, and you can see this is what I was talking about earlier, 98. They're doing very well. The stock price is at a very favorable level if you don't believe they are a scam. So next, they talked about the ATVM loan. As stated above, we are seeking additional capital to fund our business plans. We are pursuing an advanced technology vehicle manufacturing loan, which is in the due diligence phase. Okay, so that's awesome. So The ATVM loan, there's two processes, or there's two phases. The first one, I believe it's about 6 weeks long, and that's just the initial phase. And then there's a longer due diligence phase that takes about 9 to 12 months. Now, I know this because I did a lot of research into Arcimoto, and they're going through the same process. Now, about 5% of applicants actually get approved for this loan, and Ford, GM, Nissan, Tesla have all applied and gotten those loans in the past. I believe Ford got about 1.8 billion, Tesla 500 million. So to see them going this route, the ATVM loan, it could not only give them a lot of money, but it would allow them to get this money or this loan without actually diluting shareholders. So this is huge, and to hear that they're now in their due diligence phase, which is 6 weeks after their application was submitted and accepted, this is big, in my opinion. And then tax credits and grants across multiple jurisdictions. We hope to complete the ATVM loan opportunity in the next few months. Yeah, that's what I'm saying. So if the due diligence phase is done, it's about 9 to 12 months. And on the front end of that, it's about 6 months. Now, obviously, they're probably a little bit into this as they finish the due diligence phase. So next few months sounds about right. And if I can go back real quick to what I was saying about, and sorry, I'm going to get into the financials. As I was saying, 5% of the applicants actually get approved. A lot of this is because the companies that apply, they're kind of garbage. They don't have any vehicles. They have no testing. There were some floating cars that were submitted to them. There were cars that were meant to go underwater. So it's like a lot of them are just going to get just rejected right off the bat because they have no vehicles, no factory, no credibility behind the name, and the government doesn't want to give money to a company that they don't think is going to be able to put out those vehicles. And as they're now getting tested and approved for, that's really bringing up their credibility. So 100 million in loss from operations, and then their net loss is 125 million. That's pretty similar to Q4, and a lot of this, I'm hoping not as much of it is from R&D, research and development. It is. 90. I mean, I guess that's the testing and everything. However, I don't want them to really go hard because they've been talking about a van. They've been talking about a camper, and I really want them to kind of hold off and get into that pickup truck mode. Just focus on the pickup truck, scale that up. You've already got a vehicle, in my opinion, that's better than the F-150 currently for the price. And here, let me back that up. I'm not just saying that. I'm not making it up. Let's look at the pricing, and I compared all the stats in my video, Lordstown Motors Endurance versus the F-150 Lightning. You can see that now it says starting at 68,000. 68,000. The Endurance is at 5250. And you can see I took this screenshot about 4 days ago after they released the vehicle. So they got all the press. Everybody was talking about them. Like, oh my God, look at these stats. 300 miles of range, $40,000 price. What? And that's because that was for a commercial model that didn't have 300 miles of range. It maybe had 230. That was all written in the fine print. But now that they had this, bunch of articles and media pumped their stock. And, well, not really. Ford hasn't been doing tremendous. But everybody pumped the vehicle. Everybody knows about it. That's an awesome vehicle. Now they go back and they change the price. So go screw yourself, Ford. Holy crap. Yeah, no, they revised every price. What's up with that? MSRP starting at, and that's the base price. They're not even talking about the commercial one anymore, which they didn't have a picture of the vehicle for the well-equipped mid-series XLT, and up to around 110 grand. It used to be 90 grand 5 days ago. What happened to your pre-production vehicle in that short amount of time? So they're really just playing the garbage games. All right, so we got 72 cents loss. That's fine. Doesn't really matter. Current assets, they still have 590 million. I'm going to round that up to about 600 million because a lot of what they have, they still have in assets and actual parts and equipment. So, they're just renewing the factory, getting some robots operational, and that's going to cost money. Next, accounts payable, liabilities. Let's see their debt. Total liabilities. Yeah, they have no debt. Don't worry about that. That's nothing. They can cover that with a measly fraction of their. Yeah, that's fine. That's awesome. Cool. So their balance sheet, still killer. Looks like 48 betas. That's awesome. Everybody was talking about, oh, they're not going to be able to put out betas, and then they started actually putting out pictures, and that's when, you saw the community on Reddit and Facebook kind of turn back. They put out these pictures, pretty close together, but then they stopped posting them and they put this. And then it all went back to crap people were like, they're not going to be able to put out the betas. So 48, and they've done 2 major parts of the crash tests that they say are the most difficult. That's awesome. And to say that they're still on track for that 5-star rating, I'm not surprised, but it's good to hear as well. So he did say, however, we have encountered some challenges, including COVID-related and industry-wide related issues. So this is great. This is great. Obviously, they're going to be talking about some of the issues that they've been having. However, this was to be expected. And actually, a lot of people were talking about this company like, how are they not mentioning the chip shortage? How are they not mentioning the supply shortages that we're seeing globally that's affecting everyone? GM, Ford, Tesla, NIO, XPEF, everyone. So why aren't they talking about this? So this is big. This is good. It'll make them seem even more credible. However, we have encountered some challenges as we progress towards our start of production deadline. These include significantly higher than expected expenditures for parts/equipment, expedited shipping costs, and expenses associated with third-party engineering resources. We secured a number of critical parts and equipment in advance, so we are still in position to ramp the endurance. But we do need additional capital to execute on our plans. We believe we have several opportunities to raise capital in various forms and have begun those discussions. We are excited to showcase our plant, vehicle, technologies, and strategy at our upcoming Lordstown week during the week of June 21st as we host investors, customers, partners, suppliers, and the media at our Lordstown, Ohio facility. So yes, they just mentioned that they are facing the same issues that the rest of the automotive market is. Ford had to shut down factories for weeks at a time, GM, Tesla, even Chinese companies. Excuse me. I'm kind of sick, so my voice is actually pretty bad. I really apologize to all you guys. However, this is to be expected. I'm going to start tuning into their call. Let's see. I think we still have... Yeah, we still have about 10 minutes. It starts at 4:30 Eastern time. So cool. Let's see it. Yeah. So we can see that I think this is for fourth quarter 2020 early. So we did know that they were asking for revised information from SPAC specifically, the SEC, and it seems like this is probably what it is. That's why they had to push back their earnings date at first. It was scheduled, I believe, for 2 weeks from today, but now this is what they're providing. Expected endurance production in 2021 will be limited and would at best be 50% of our prior expectations. So yes, the at best is the part that the whole media is going to talk about. However, 50%, even if they make 25%, which was my projections, the stock is still drastically undervalued. I don't have the picture of that right now, but I did make a price target video on this company and their stock, and I did a projection conservatively with a floor price to sales of if they only managed to hit 25% of all of their production targets. So, if this is even 25%, which is 500 vehicles, which I think they're going to be able to do because based off of what they've done with the betas so far, they built 50 and they've been testing them and they haven't been trying to mass produce. So knowing that they bought some of the parts earlier, they have the equipment done, they have the cash still, and they're applying for that ATVM loan that's going to be either accepted or denied in the next few months. And again, a lot of people are denied for that ATVM loan. However, it's because they have garbage vehicles that aren't tested, they don't have a factory, and they don't have cash. So why would you give money to somebody who's probably going to default? Fister's old company, for the Fister Karma, they actually applied and they got it withdrawn eventually. They did get accepted, but then withdrawn because they lost a bunch of vehicles to Hurricane Katrina, and the vehicle just wasn't good. Let's see. What do you think of the chances of share dilution are? I'm hoping they get the loan. Honestly, I think we'll probably get diluted. Now, I can't tell you how soon, but it seems likely that we're going to get diluted. If they get approved for the ATVM loan, keep in mind Ford, I believe, got $1.8 billion. Tesla got $500 million. I think that was in 2010, 2012. And they paid that back in 2 years. GM got in the billions, like 1 billion. Nissan, same thing. So it can be a lot of money. And even if they get on the lower end of that range that I just gave you, no way, Jose. Bankruptcy plan will be announced today. Oh, man. Sun GFP. Come on, man. Be positive. Here, I'm going to put a little stop sign. There you go. I don't know. This seems good to me. You know, they're applying. They're probably going to get the loan, and if they get that lower end of the range that I gave you, 500 million for Tesla. I believe Fisker got 600 million, and that was a company that didn't even have vehicles out at the time, and they were putting out a hybrid. Now, since then, it has gotten harder to get that ATVM loan. However, if they can get even a fraction of what Ford got and get like 200, 300 million, I think that's going to be enough to push them into production. And once they get into production, they're going to have already a profitable vehicle by my calculations of their profit margin. So I'm hoping that maybe at Lordstown Week, they're going to talk about, the price of the vehicle and perhaps even talk a little bit more about the margin, because we expect them to actually be profitable, instantly when they begin mass production. So we got 6 minutes until that conference call. Do you guys have any questions? Oh, I put a semicolon. But yeah, I can see some more people are coming in. So I'm just going to do a quick little recap. Basically, they have $600 million in cash. They went through $125 million that quarter, which was very similar to Q4 of last year. They sent out a revision of their production targets, which is totally expected. We're seeing a global supply issue. I believe Ford actually revised their own projections for Q2 to be about 50% of the production, because they had to shut down some factories at some points. Costs are going up. So we're going to see some garbage numbers from Ford, probably GM. I think Tesla's working around it pretty well, but we're going to see. How much am I holding? That's a great question. I'm not going to give a share count, but I'm going to say it's about, let's see. Okay, so it's kind of my positioning as in like longer term, because I don't want to hold this until like I retire. I'm about 10%, 10 to 15% is in that stock. It used to be a lot more. However, again, it's been falling a lot, and I'm slowly dollar cost averaging, putting in a piece of my paycheck, every week. So, however, I am swing trading this as well, and this is going to be into Lordstown Week, because I think we're going to see, a tremendous run up. If we're going to look at the technicals real quick, this is the 1 year chart. So each one of these candles is, whatchamacallit? It's 1 day. So you can see right here, that's $9, and we retested that, I believe, right now, we're just below it. So as long as we stay, because I'm not sure why it's selling off, I'm sure it'll pop back up tomorrow because these are good numbers. And the conference call, they're going to elaborate on Lordstown Week, and I think that might push it. I'm not saying get in now to try to make a flip. But if we do manage to stay above that $9 per share, it seems like we made potentially some form of bottom. And, we got above that 40 SMA, and I could see a retracement to $12.50 per share. You can see that coincides with this area of consolidation very early in the ride or DPHC days. And then this low, and then this, what looked like it might have been a low, but then we broke below, consolidated, didn't break above, and then got shut down. Now, recently we ran up all the way to almost, I believe, $12 per share, and I actually took some out and I started selling some covered calls on the shares that I own. Oh, beat around the bush? No, I'm sorry. I own about 10 to 15% of my account in it, and I'm swing trading probably a third to a half of my position. So probably about 20-ish% of my account is currently in Lordstown Motors. Now, with that said, my swing trading position does have a stop loss. So, if it breaks below and holds like $9 per share or something, either I'll sell some covered calls to kind of mitigate my downside. However, yeah. Am I going to sell anytime soon? No. It depends on where the share price goes, because obviously if it rockets before, if it goes to $20 per share before Lordstown Week, I'm probably going to trim some. However, covered calls, which for those of you who don't know, there's option contracts. You can sell them, and then you have technically like a -1. That's what it says on the position. Instead of like one call, you have -1. And then you reap the theta. And so if you own 100 shares and place what's called a covered call, you can make the time value or time depreciation on that call contract. So it's something that you can do to keep your shares, but still make money if the stock goes sideways or down. So that's something that I'm doing right now instead of selling. However, if it goes to like 30 before, next month, obviously I'll take some out. However, I do think this stock, and again, I made a price prediction on this, I think it can go to 80 quite conservatively within the next 2 to 3 years. So I'd be a fool if I sold at these levels when it's practically a 10x. But of course, that's assuming a lot of things go right. Let's see. After hours, it is now lower than $9. Why do you think that is? So, yeah, we broke down, it seems like potentially a double bottom, below that $9 level, which I'm hoping we do stay above from a technical perspective. However, I think that's just due to either shorts and people seeing that they're revising the projections, because usually people like to say or look at projections and be like, aha, see, I told you they couldn't do this, because right here they said that their expected endurance production in 2021 will be limited and would be at least, or at best, 50% of their prior expectations. So I already showed this, but some people are entering the chat a little later. They had 2,000 vehicles projected for this year. I was expecting around 500. So to see, that they're even going to do at best 1,000, that still seems like a pretty bullish number to me. And if I go back to the market capitalization, and we're now at almost time for that conference call, we're trading at $1.7 billion of total valuation. And that's as of the close, I believe. So that's not factoring in that $3 billion factory, as well as the $600 million in cash. If we subtract 600 million from this, we have 1.1 billion, and that's the whole valuation of the company. So I think the reason that it's down is because of that revision of the production targets. However, I really think we're still quite undervalued, even if they manage to hit 25%. Because again, global shortage, but this is why, shorts are going to come in and try to make that short-term money. However, it might honestly rebound tomorrow. Who knows? So now I'm going to play that conference call. Let me know if you have any questions. I'll be reading from the chat. Alright, well, looks like we're just getting some classical music right now. Let's see. Perhaps. I want to go to their homepage. You notice 80% interest rate on short sale. Interest rate? I generally just go on Fintel for the shorts, like ride short ratio. And I go on Fintel, but if you can link where you're getting those numbers, I'd love to look. And you can see right here it says 30% short volume ratio, which is very high. However, I don't think they're going to be diluting shareholders until they at least get their ATVM loan either approved or denied. Now you can, where is it? Right here. ATVM loan, I'm going to go over it real quick again. It's a loan from the government for advanced technology vehicle manufacturing, and it's basically mostly for electric vehicles or renewable, sustainable energy vehicles. Tesla's gotten it, Ford got it back in the day, Fisker Karma actually got it revoked before they went bankrupt and got bought out. But Ford got like 1.8 billion, Tesla 500 million. So this could be a sizable loan for a company that's already got testing under their belt. They've got one of the biggest factories, I believe the third biggest factory in the United States. So I think they're probably going to get at least something from this loan, a few $100 million, and that's a way around diluting shareholders. So let's see, next question. Interactive brokers. I'm going to look that up in a second. I've never heard of that site before. Ron says,
ladies and gentlemen, thank you for standing by, and welcome to the Lordstown.
Looks like the conference call is about to start. Last question is, can Ride really build their truck by September? I'm afraid they will not be able to do it. Yeah, so that's kind of a fear that people have had generally. However, we did just get a revision, and they're saying that they're still expecting at best 1,000 vehicles by the end of this year, which they've just put out 48 betas, and that's strictly to test.
please press star then
So
0.
that means that
I
they're
would
at
now
least
like to
they
hand
have
the
a
conference
functional
over to your
production
host
line,
today,
and even though
Carter
costs
Driscoll,
of
Head of
shipping
Investor
parts and
Relations.
equipment
Please
are
go ahead.
going up and have been going up, you know, they've already pre-ordered some of the stuff, and they said here, we secured
Thank you,
a number of
operator.
critical
Good
parts and equipment
afternoon.
in
Thank you
advance,
to
so we are
all
still
for
in
joining
position to
Lordstown
ramp the
Motors'
endurance.
first quarter
So they're still
2021
expecting to put
earnings
out
conference
vehicles.
call.
Don't worry about
To
that too
supplement
much.
today's
However, keep in
discussion,
mind,
please go
you
to
know,
our IR
the longer
website
that the
to
supply
view our press
constraint
release and investor
goes
deck.
on,
Before we begin, I want to
it's
call your
it's going to
attention
level
to
out
our
other
safe harbor
automotive
provision
manufacturers
for forward-looking statements
to scale
that is
up, and it's
posted on
going to
our
allow
website
Lordstown Motors more
and is
time
part
for
of our
R&D and
quarterly
really
update.
refining their
The
vehicle.
safe harbor provision identifies risk
All right,
factors
let's
that
play
may
that
cause
conference call.
actual results to differ materially from the content of our forward-looking statements for the reasons that we cite in our Form 10-Q and other SEC filings, including uncertainties
Can you guys hear
posed
this
by the
okay?
difficulty in
Let me know in the
predicting
chat.
future outcomes. Joining us today will be Lordstown Motors founder, CEO, and chairman, Steve Burns, President, Rich Schmidt, and CFO, Julio Rodriguez. Steve will provide a strategic update on the business, followed by Rich, who will give a more detailed update on production, and then Julio will cover the financial results, followed by Steve, who will provide our outlook and closing remarks. With that, I'd like to turn the call over to Steve Burns.
Thanks, Carter, and welcome to everyone. Our mission here at Lordstown Motors is to be the leading manufacturer for electric light-duty trucks in the United States. Our first vehicle, the all-electric Endurance work truck, is on track to start limited production in late September, and we expect to start deliveries later in fourth quarter. As a reminder, the Endurance is a full-size pickup truck that we believe can achieve the equivalent of 75 miles per gallon and travel up to 250 miles on a charge. Today, I'm very excited to announce a major milestone. We have started physical crash testing of our beta vehicles. We have passed every test we have taken on the first attempt, including the full-speed frontal and the side pull test. The data results from the physical crashes correlates very closely to our software model, and we are therefore reiterating our belief that we can achieve a 5-star safety rating, front, side, and rear, for the final version of the Endurance.
So they've been saying for a while that
To date,
they're going to
the
get a
Endurance has
5-star
met the
rating on their Endurance
motor
for the crash
safety,
tests, and that was based off
which
of a
is
software model that they were
FMVSS
having.
208,
Hold up.
and the side
So to
impact
see that that's actually going in
FMVSS
line
214
is
requirements
awesome, because
through
that means
these
that a lot
actual
of their
crash tests,
projections are more likely to
held
be
at the
true or
federally
correct.
approved TRC test facility in Ohio.
Why is it
These
missing?
are the two most difficult tests for any vehicle, and we pass the requirements with our beta vehicles.
Cool. Good.
These are critical milestones for us and remove some of the biggest technical barriers. This provides us a solid foundation as we complete our development and validation work. We are continuing to work on establishing relationships with fleet management companies that we believe can be the basis for meaningful revenue once the truck is ready for sale and we can demonstrate that it performs to our expectations. These include our previously announced series agreements with Holman, as well as a recent agreement we've entered into with Pride Group. We are also in discussions with several charging companies and infrastructure providers to help us provide a simple, seamless solution for our potential customers. Our ability to produce enough vehicles to satisfy our expected market demand depends on many variables, such as suppliers and passing all required regulatory
This is Pride
hurdles,
Group's side. They just mentioned
and
a huge
also
partnership with it.
our access to capital. Our research indicates a very robust demand for our vehicles. However, capital may limit our ability to make as many vehicles as we would like, and as such, we are constantly evaluating our capital needs and the various types of capital available to us, including strategic capital. As the automotive world speeds towards vehicle electrification, it's starting to be clear to many that an electric full-size pickup truck with a 250-mile range is going to be quite attractive to a large portion of the market. As a new OEM, we are often asked how we are able to be first to market in the highly competitive pickup truck category in the U.S., and how are we able to offer the Endurance at such a competitive price point? Well, we have two major advantages that have enabled us to reach our progress to date. First is our innovative technology. We believe that the Endurance will be the simplest mass-produced truck ever made, far simpler and smarter than any internal combustion vehicle, and even simpler than any EV on the road today. Our innovative hub motor-based architecture enables us to use advanced proprietary software-based motor control rather than mechanical routing of power to each wheel. The result is a smart pickup truck that is robust enough to handle the most demanding of duty cycles, but easily fueled, maintained, and serviced, and yet can be offered at an attractive price point to our customers. And this is just our first model. Our goal is that subsequent options will include things like advanced informatics and crash avoidance features that we offer through over-the-air software updates. Another expected benefit of the physical simplicity of our vehicle is increased uptime for our customers, which translates into a lower total cost of ownership, a key metric that drives customer demand and product loyalty. We have been conducting robust testing of electric hub motor and vehicle design over the last year, including entering the Baja race. The race allowed us to validate our vehicle performance in literally the harshest of environments. While we are still learning how to optimize fast charging in such a terrain, we had no mechanical issues in the race, and were able to accomplish two important goals. One, validate our hub motors, frame, thermal management system, and battery pack. And two, advance our DC fast charging capabilities. We learned that our production hub motor design is well suited to perform in low traction environments like Baja sand, and our battery pack is resilient to high torques and high impacts. We also learned that our thermal management system was able to compensate in the demanding Baja race environment. For DC fast charging, the race requirements for quick recharging prompted us to modify our DC fast charging capabilities months earlier than we had planned. As a point of clarification, our production battery pack worked to the expected range, and its mechanical performance was flawless. The reality of any battery pack is that it has a fixed amount of energy. Relative to the energy consumption of the vehicle, sand and loose soil has 4 times higher coefficient of friction than a paved road does. Our energy usage was on par with our simulations, increasing our confidence that our vehicle's range will meet the 250-mile target for an average customer duty cycle. Finally, 40 miles of Baja is enough evidence that our thermal and powertrain performance assumptions are correct in such extreme use case.
So
Final testing and validation for our production vehicles will be completed at greater than 500,000 miles of paved and hard-packed dirt roads. The Endurance customer will receive a vehicle with amazing performance and safety pedigree. In addition, we are thrilled to have the opportunity to illustrate the capabilities of our Endurance demonstration vehicle to the United States Army as a potential vehicle for the ELRV, which is Electric Light Reconnaissance Vehicle program. And we look forward to working with the U.S. Army should the opportunity present itself in the future. Our second advantage is in the production readiness for scale. Our former GM facility has now been upgraded to EV readiness with full stamping, robotic body welding, assembly, and paint. This plant would normally have required billions of dollars of investment to build as a greenfield. Our team is very proud of the betas we have built here, proud of their quality, safety, and drivability. One very important production note we want to remind you of is our 800,000 square foot propulsion facility, which will manufacture our battery packs and electric hub motors. And it will be one of the largest battery pack lines in North America and the largest hub motor facility globally. This will be an amazing accomplishment, and we fully expect our investments in our battery pack design and its automated production to provide us with a key competitive edge, both in cost control and pack quality. The first phase of the pack line is installed and is being tested currently. The line will make battery modules that contain over 6,000 individual cells that are assembled into every Endurance, and it will do so without human hands ever touching the cells. It is a mechanical wonder, and we believe will be a huge strategic advantage for us.
That was one of the big claims made by Hindenburg.
Next, we will be building out our hub motor production line this summer.
So this is big.
We can't wait to show everyone our vertically integrated factory during Lordstown Week starting June 21st. In addition, we have established in-house production of key components and secured critical supply chain partners to support our ability to scale. This includes agreements with semiconductors, inverters, cells, and frame. Although COVID has constrained the automotive supply chain globally and has caused a material increase in our R&D expenditures, we have been proactive in this effort. Finally, I want to remind everyone that we have begun work on our second vehicle, an all-electric van. It's built on the Endurance chassis, which leverages many of the same parts, engineering, and existing supplier agreements. And we will share a prototype with you this summer. Our hub motor-based skateboard is especially well suited for a van because of the lower floor height that results in more cargo space and has easier access and regress.
I mean, vans are all the rage right now.
Leverage is the way to build a strong, multifaceted automotive company.
The same platform.
We are leveraging much of the Endurance technology in the van and all our future vehicles. With that, I will turn the call over to Rich to discuss our progress on production, engineering, and regulatory compliance.
Thank you, Steve, and good afternoon to everyone on the call. I am Rich Schmidt, President of Lordstown Motors, and I'm happy to provide an update on production, engineering, and testing. First, I will update you on the betas, followed by progress on the plant retooling and propulsion build-out, and finally provide some context on our early crash test and other vehicle validation efforts. First, the Endurance betas. As Steve said, we are firmly on track with our beta builds and are close to completing this program made up of 21 for testing and the rest for production validations. Crash sled tests are used by the industry to verify that the airbags, seatbelts, and pretensioners work within the Endurance interior for the CAE simulation predictions for FM VSS performance. We have also begun durability testing, understanding how hard it is to pass crash tests. The requirements for selling vehicles is to meet FM and VSS regulations, which we expect to pass without issues. The objective is to achieve competitive NCAP test star ratings, which are not mandatory at this point. We do not see any impediments to meeting our NCAP targets. Again, based on early results, we are excited to report that we believe the Endurance remains on track to achieve 5-star rating. We are retooling the plant to be flexible to enable us to build multiple vehicle platforms inexpensively from trucks to cars. We are still on track to build pre-production vehicles, known as PPVs, in July. PPVs have the battery packs, hub motors built in-house, as well as paint, sub-assemblies, frames, all completed in our plant. As we complete PPVs, some will be heading to conduct their crash and engineering validations by the National Highway Transportation Safety Administration, NHTSA, in late summer as one of the final steps before production. Now let's talk about the retooling for stamping. All 4 stamping presses are up. We begin reconditioning and proving out. Our robotic body shop, the most expensive tooling of our plant, is up and running, including the laser roof welds. The paint shop is on schedule and is virtually complete. General assembly is also on track, and finally, we have started to install the new chassis marriage line. Shifting focus to propulsion, we are due to start building the first electric hub motor line on site, and in July, it is currently being validated by our partners. We anticipate commissioning the first motor line before the start of production in late September. We believe that once all lines are built and commissioned, that we should be the largest manufacturer in automotive hub motors in the world. And with that, I will hand over to Julio to take you through the financial results. Thank you.
Thank you, Rich. Good afternoon, and I also want to thank everyone for joining today's call. I am Julio Rodriguez, the Chief Financial Officer, and I will review our first quarter
So the hub
2021
motor line,
results.
they're partnered with Elaphe for that technology.
As you may
So
have
to see that they're
seen, we
validating that
published
line
an
before scaling it
8K
out
on
within
May
the factory
11
and soon by
that
July,
addressed the
that's
recent
huge. That's
statements
awesome. As
levied
far as
by
the
the
battery packs are
SEC
saying that they're going to have a
regarding the
full line where
accounting
not a
treatment
single
for
human touches
warrants
that. So
issued by
all
SPACs.
robots, that's awesome.
We are continuing to
As
work
well as
on
all
completing the
4 stamping
restatement
presses up
and
and running.
expect to
That's
be
the
in a
most
position to
expensive part.
file our
They
Form
have the stamping presses from
10K-A
GM's old
and
factory.
Form
However, the actual
10Q
parts,
soon.
it's metal that actually has to stamp
Now,
other
turning to our
metal,
financials,
aluminum, over and over and
all
over.
our
So it has to
financials
be
are
milled
presented in
very
accordance
precisely.
with
It's
GAAP.
very expensive because it's a very
In the
hard
first quarter
metal.
of
So it has to be
2021,
very strong,
we recorded
and
an
that's why they
operating
wanted to
net
nail
loss
down the
of
prototype very hard before
$106
actually,
million.
buying the parts. So to see
Our
that all
expenses
4 are
consisted
purchased,
of
priced
$14
into the
million
balance sheet,
in
and
selling
up
and
and running,
administrative
this is
expenses
big. I'm
and
excited.
$92 million in R&D, of which $1.9 million is stock compensation expense. The higher than expected R&D expense is largely from higher part costs from a supply chain that remains under duress from COVID issues and which impacted our beta costs, higher costs of shipping, including expedited shipping, and greater use of temporary external engineering firms. For the balance sheet, we ended the first quarter of 2021 with a total cash position of $587 million. We have total assets of $779 million, largely consisting of our cash position, plus $155 million in PP&E, $76 million in total liabilities, mainly accounts payable, and $703 million in shareholders' equity. From a cash flow perspective, we used $72 million in cash from operations, used $53 million in investing activities from purchases of capital assets, and generated $83 million from financing activities, mainly from warrant exercises. Our combined cash used in operations and investment was $125 million, excluding the $82 million in cash we received from warrant exercises. We ended the quarter with approximately 177 million shares. If all outstanding warrants were converted today, we would have approximately 180 million diluted shares outstanding, not counting employee stock options. Thank you, and I will turn the call back over to Steve, who will provide our outlook and closing remarks. Steve?
Thanks, Julio. As we discussed in our last earnings call, in response to the short sellers report, our board of directors established a special committee of independent directors to investigate the allegations made by the short seller. The SEC has also commenced an investigation and has sought information from us, and we are cooperating with that investigation. The special committee's review is ongoing, and we expect that the special committee will be in a position to report on the results of their review of the allegations in the short seller report prior to the end of the second quarter. Pending the release of those results, neither the special committee nor the company is in a position to comment further on the short seller report. Now, on to guidance. As we have already indicated, our costs have exceeded our prior expectations for the reasons laid out earlier, and the pace of our production ramp will depend on our ability to secure additional funding. We are updating the outlook for 2021 that we provided last quarter. We continue to expect between $250 and $275 million in CapEx. On the operating front, we now forecast $55 to $60 million in SG&A, of which $4 million is stock compensation expense, and $280 to $290 million in R&D, of which $7 million is stock compensation expense. We now forecast a net loss of between $360 and $380 million, or approximately $2.05 to $2.15 in loss per share using the 177 million basic Class A shares. Let me explain a few additional key assumptions in this guidance. These forecasts would allow us to finish the year with approximately $50 to $75 million in cash without any additional funding. But in order to do so, we would be pursuing a conservative budget, reducing costs, and delaying investments, and the production would start in September would be at best 50% of the prior 2021 unit expectations. We are currently in discussions for an asset-backed financing opportunity that is at the preliminary stage. In addition, we also remain in due diligence for an application for the ATVM loan. Furthermore, we intend to engage in discussions with strategic investors, and we continue to seek and pursue opportunities in other tax credits and grants across multiple jurisdictions. We want to thank all our talented employees for their hard work and dedication across our offices in Lordstown, Ohio, Farmington Hills, Michigan, and Irvine, California. We are proud to be part of the Voltage Valley Renaissance in Ohio and part of the solution to addressing the climate change and sustainability issues we all face. In summary, our mission is to bring to market the first full-size electric pickup truck and deliver on our commitment to safety, sustainability, and efficiency in the automotive landscape. We want to reiterate how delighted we are by the performance of our truck in these crash tests. These are major milestones that we have achieved on our road to production. Every member of the Lordstown team is laser-focused on bringing the Endurance to market as soon as we can, using our innovative and disruptive technologies. We want the Lordstown Endurance to be the first mass-produced full-size electric truck in the world. Thank you for your time, and we very much look forward to welcoming you here in Lordstown the week of June 21st.
Operator, we will now take questions.
Thank you. As a reminder, to ask a question, you will need to press star then 1 on your telephone. To withdraw your question, please press the pound key. Please stand by while we compile the Q&A roster. Thank you. Our first question comes from the line of Greg Lewis with BTIG. Your line is now open.
Yeah, hey, thank you, and good afternoon, everybody. And yeah, Steve, hey, congrats on moving forward with the beta testing. Seems like it's kind of progressing nice. I did want to dig in a little bit into the additional CapEx, kind of walking through and looking back at the previous quarter's press release. It looks like about 100 plus of that was related to R&D. Could you kind of walk us through some of those changes and what is kind of driving that incremental capital requirement on the R&D side?
Yep. Thanks, Greg. And by the way, just before I jump in, I want to make sure everybody knows we have Darren Post, our chief engineer here, and John Vo, our VP of propulsion. Just want to be able to answer any questions you could ask. The 50,000 foot view there is we've had to, because of supply chain, we've had to bring a lot more stuff in-house, right? Hurts you up front because you got a tool for that, you've got to engineer for that, right? But it helps you in the long run. It definitely helps you as the Endurance volumes go up and as we layer in the additional vehicles like the van. So the engineering, for example, a lot of people don't realize all the betas, right? Those aren't inventory; those are treated as R&D. So as we march through everything, some things were a little more expensive than we thought. Some things we had to go outside for validation, like the brake testing and things like that. And a lot of it's just how we're going to make these parts inside rather than purchase them. So that kind of all dovetails into that.
Okay, great. Thank you for that. And then I just did want to follow up. I mean, it looks like you're progressing through on, making it through forward on the crash test. What other kind of hurdles should we be looking for over the next couple months, kind of ahead of moving into pre-production in July?
Right. Great question. So obviously, crash testing is a huge gating item, right? If that doesn't go as you think, or if it goes really sideways, that can cost you a year and, hundreds and hundreds or $1 billion, right? So that is, why there are no small car companies usually in the United States, because of that. So to get past that gating item really should lower execution risk for anybody thinking about, are we going to get to September? The other thing is, as we've been making estimates over the last year, as you get closer to production, obviously the number of variables decreases. So you just start to dial it in more and more. Of course, could supply chain continue to evolve? Yes, but we have taken the liberty of securing the things, the big things that we can see that we wouldn't be able to pivot. So, for example, we have our cells sourced from 2 different vendors. So we have enough cells contractually to make it all the way through, our foreseeable future. Electronics, the chip shortage you hear about all the time, we went ahead and upfront bought those enough to get through this year so that we're not constrained that way. Frame, we had to bring the frame in-house because that was at risk with suppliers. So things like that. But I think in general, look, this is costing us more than we thought, but relative to, the conventional thinking, we're moving very quick and, really doing this for, a good pricing. So we're very happy with it. We don't like that it's moving. The target's moving a little bit, but we've taken the attitude of first to market is everything. It's really starting to evolve that, a vehicle like this size, this bed, this cab, this range, this price point is a very popular item. Kind of with the events of last week, it's not just a niche item now. It's really gone mainstream, and so we think first mover advantage is very important. So we have, always sided on the fact of how do we maintain September.
And Greg, just to drill down on your point about what's left to do.
Yes, Darren Post here. A couple of things. We go from beta where we have production intent designs with more prototype parts. But as we go to PPV, we go to production intent parts off production tools. So that's going to be the big change that happens in the PPV build. As we do that, we'll be continuing deeper into our durability testing, our brake tuning, steering systems, and vehicle dynamics work. So that's a big milestone as we move forward, and then that sets us up for FMVSS 100 series, which are the non-crash regulatory tests that we need to do with the PPVs. That will start at the end of the summer.
So the short answer, again, Greg, I think is regulatory is a big part of this business, right? And as you can imagine, it's supply chain and regulatory. Once you get your recipe and your engineering done, and you've got a vehicle that, physically is attractive to folks and also, the specs meet their needs, then it comes down to regulatory and supply chain and your in-house production. So obviously in-house production we pretty much control, but regulatory is a big part of U.S. automotive. We've, again, passed the biggest gate there is. These 2 tests that we've passed are the toughest 2, and we wanted to get those out front. The fact that the test matches highly correlates, as they say, to our software emulation, so it basically did exactly what we thought. It's quite remarkable to be at this stage.
Okay, perfect. Thank you very much, and look forward to catching up in a couple weeks.
Thanks, Greg.
Thank you. Our next question comes from the line of John Murphy with Bank of America. Your line is now open.
Good afternoon, guys. I just wanted to ask a first question. I mean, obviously, you're commenting that you're going to raise capital sooner rather than later, and you made mention on the call of an ABL or an asset-backed line or other structure. I'm just curious what you would put into that, and maybe if you could consider the Lordstown plants, what would the borrowing base be on that? Because I mean, you've talked about that being billions of dollars. I think $2 billion plus in replacement value. So that would give you a lot of runway. I mean, how do you think about potentially pledging the Lordstown plants, and is that part of the discussion so far? And how big could that be?
Good. Great question. And obviously, we're looking at all types of capital, but non-dilutive like that is that in strategic is very important to us. But, we have zero debt, and we have a lot of assets. So it lends itself, and we're buying a lot of parts. And so all that, there's folks that want to finance that. So it's we're pretty mature on some of the discussions. I mean, they're early, but we feel it's a prudent thing to do, so we're spending time on that. Julio, did you want to say anything about that?
Yeah, and we have, $1 billion in assets that we can, use for, but we want to do capital financing of the new or next capital expenditures that we are going into. So,
right. So there's a lot of folks that, not a lot of folks. There are folks that make a living out of financing CapEx, and then it always helps if you got extra collateral above and beyond that.
Yeah.
Got it. Okay. And then just a second question. Steve, you were mentioning bringing or insourcing some parts because the supply chain was not necessarily ready or disrupted by COVID, and that's part of the reason the expenses in CapEx went up. I think you said something about insourcing the frame. I'm just curious, when you think you need to make decisions, because the frame is a big, it's a big capital commitment and an R&D, feat on your trucks and any vehicle, for that matter that has a frame. What other parts are being insourced, and when do you kind of pull the trigger and do that? Because that seems like a pretty quick turnaround if you were insourced the frame since the last conference call. I'm just trying to understand how this is working.
Yeah, and just for those that don't know, we are a body-on-frame vehicle, like all trucks or most trucks, and so the frame is where a truck gets its rigidity, its strength. We also have the thing that most people don't have to consider when they're engineering is we have a big battery pack in between that frame, and just again a quick note on the frontal crash test. It did not penetrate, didn't touch the battery pack. So, those are the kind of considerations that go into your frame. And, the vendor that we had laid out for the frame suddenly was going to have to charge us more, and we just decided to take it in-house. It's constantly do we pay more for the part and hurts our profit margin, or do we source it inside? And sourcing inside, of course, like I said, because this frame will be very similar to the frame for the van. And, when you're going to be a multi-vehicle platform and you really can get those kind of leverages, it starts to change your decision process. And the van is just looking more and more like a winner for us. So that affects it. So I'll let Rich maybe jump in a little bit there.
Yes, so John, like Steve said, we do, when we source stuff, we do, of course, have multiple suppliers. We had 3 different suppliers on the frame. Some of it was based on timing. Some is based on cost. And a lot of it was based on the timing schedule of the launch of the vehicle. Some of it was based on cost. But once we do the return of investment and the timeline of the launching the Endurance in the fall, it came down to best option for us was to insource the frame. And as Steve said, it gave us the flexibility to go to market on multiple vehicles quicker as well. And of course, we have our own stamping plant, and we have a lot of spare robots with the size of the facility that we've got from General Motors. So it allowed us to put a lot of those processes in place, and it was the best business decision for us to insource the frame. So that's the decision we went with as a business.
And Rich, if I may just follow up, how fast can you make that decision? Because we're talking about a big decision, and if you've got the stamping presses and the robots, the weld shop to do this, that's pretty impressive, and it seems like maybe you should have been thinking about doing that before, if you had all that stuff, that capital. How fast do those decisions get made?
It took us about, we didn't really want to make that decision up front because of the capital investment, as you said. It was about a 3-month decision that we really didn't want to have to do in the beginning because we were trying to save the capital. But at the last minute, as Steve said, we had a supplier kind of pull back, and then the other supplier, let's say supplier B and supplier C, the price was very drastic to our BOM cost and timeline. So we had to choose to bring it in-house at that point.
The other decision that went into it is, where we're going to have to change it. What if the crash test didn't go well? We're going to have to change it. If you got an outside vendor making it, they're not as quick to respond. Now, it did great in the crash test, but we're just, it is constantly a buy versus make conversation. It comes down to usually, it's a little more expensive up front, of course, but pays off in the long run. And, as an early OEM, right, we're really cognizant of, there are some people that sub everything out, right? Some EV startups just say, I'm subbing everything out. And, we have a lot of folks here from Tesla, for example, and they know a new OEM, whoever you are, you're going to have early issues. And you want to be able to deal with those quickly, not have a third party taking their time or busy with another client or, that sort of thing. So big things like frame, we just started realizing we should have in-house in addition to the economics. It's also being able to, we want to make sure that any early teething problems that we have as a new OEM, we're in position, right? Our battery packs, we're making the pack, we're making the hub motor, we're making the frame. The biggies, are in our control.
And then just lastly, real quick, one of the appeals of the business model is that you're getting out there in front of potential established competition, and we've heard news about the F-150 Lightning. Price point is relatively, surprisingly low, below $40,000. So, as you think about the competitive, environment and the potential slowdown in your production ramp, how concerned are you in that, putting you sort of on your back foot in the competitive environment, and or if you raise enough capital, could you reaccelerate the your production, ramp curve?
Oh yeah, everything we're doing is to enable us to, when we receive the capital, we're looking at to be able to have it all, the pent up, system ready to go. I think the competitive landscape is the most important part of our conversation here.
With a picture
we're just
saying 40,000. Then they revised it after they came out and unveiled the vehicle.
The competitor, who's a very established automaker and has been working on this for several years, and didn't come out with a 600-mile truck or a flex capacitor or a wild-looking vehicle, right? A frunk, same bed, same cab. It's about the same range, about the same pricing. So it's quite remarkable that we are on par with somebody like that at this point, and we're getting to market faster. But we sure are always cognizant of there just seems to be such a market demand for us, and now that it's gone mainstream, not just niche, we want to be ready to pounce if the market demand is what we think. So we're always keeping that in mind. It would be crushing to have the lead, have the first market mover, and not be able to fulfill. Obviously you can't just move on a dime in this business, but every decision we make is trying to, make sure we can satisfy and take, we want as many people buying our vehicle while we're the only game in town. And that will just give us, we want to be on version 2.0 when somebody else comes out with version 1.0.
Great. Thank you very much, guys.
Thanks, John. Next question, please.
Thank you. Our next question comes from the line of Mark Delaney with Goldman Sachs. Your line is now open.
Yes, good afternoon, and thanks for taking the questions. The first question's on the liquidity target that the company articulated by year-end. Can you provide more details on what you're thinking in terms of working capital that may need to be invested this year to support the ramp and also support the sales and operational parts of the business? What's embedded within that liquidity target?
Good. Well, I'll start off here and then I'll turn it over to Julio. We just wanted everybody to know that, with no funding, we can get trucks out this year, which again we think is paramount. And so we're expecting to receive funding in the various manners of which we've discussed, and we expect the ramp to be basically what we had hoped, but we have to put the asterisk of, it's going to require us to be successful in our fundraising, which again, we are, going to be the only the electric pickup truck market, as far as we're concerned, just got a huge boost last week, right? And to have our model be almost the same, we feel that we should keep our ramp, and that we have with being debt-free and ATVM loan optionally, we feel we'll be there. But we wanted to make sure everybody knew that worst case, we are still making pickup trucks this year.
Yeah, I think the key item of the working capital obviously is inventory, and slowing down the ramp save us in inventory, but we need to get working capital financing, and that's what we're pursuing. So as soon as we get the capital financing, definitely we're going to start ramping up again.
Got it. Okay. And my second question was on the ATVM loan opportunity, and you spoke a little bit about that on your last earnings call, and then you talk about in the press release today about hoping to complete that in the next few months. I think you said before, this is a pretty extensive diligence process that the government goes through. So maybe you could talk a little bit about what they may have already done in terms of their diligence process, and what they may still need to do, and kind of where that next few months potential time frame is coming from. Thank you.
Okay, I'll jump in and let Carter take it. But of course, we got to be sensitive to their confidentiality. But I don't think it's a secret that they look technically at you, they look financially at you, they look EPA-wise at you, they look at market demand for your product. These are senior folks, right? They've been doing this for a long time. I don't think there would be a Tesla if they didn't get this loan back in the day, right? So they're very conscious of all of it, and I think it's important to note they have not made a loan in a while, so the fact that we're this knee-deep with them is really encouraging to us. And I don't know if I'm allowed to say we're optimistic or not, but we feel good about it. Carter?
Yeah. So, Mark, just to tie it into your liquidity question earlier, so that it doesn't play any role in the liquidity numbers that we provided you with our modified production ramp. They've done, as Steve said, several rounds of diligence. We believe that so far they've been favorable. We cannot comment on any timing, but we believe that we're progressing at the timeline that we originally thought we would, and we're hopeful that we will reach a stage such that we could potentially come to terms. But we can't comment on the timing of the application.
Got it. Thank you.
Operator, we'll take the next question, please.
Our next question comes from the line of Harry Nickel with Wolfe Research. Your line is open.
Hi, guys. Thanks for taking the question. I think the first thing I wanted to talk about was just how we think about costs on the BOM going forward. In your first investor deck, you talked about a $42,000 BOM now and a $37,000 BOM in 2024 when you get to 107,000 units. Obviously, just sourcing expectations have changed. You've brought a lot in-house. Can you just talk about how you're thinking about the BOM now and how you're thinking about the BOM in 2024 and what all the moving parts are there?
Sure. Hi, this is Steve, Harry. Just to put it in context, we have probably 3,000 parts in the vehicle, which is very low for a vehicle. 2,000 of them we purchase, right, just to kind of frame it up. We're the only full-size electric coming out with 4 electric motors. Everybody else has 2, right? But we don't have things like drive shafts and U-joints and gears and differentials. So it's a trade-off back and forth. We make our own motors so that we can control the cost of them. We expect to drive that down significantly over time, right? We make our own battery packs so we can control the cost of those. We have our cell deals, but the pack's a big part of it, the physical pack. And I don't know if you heard on there, but the 6,000 cylindrical cells that go into every Endurance, our goal is not to have a human hand touch those. So that of course, dramatically starts to lower your cost. Did we know all this up front? We know aspirationally we wanted to get there. We're pleased that we are on course to do all that. So while we don't talk directly about our BOM, I think electric vehicles are going to be less expensive than anybody dreamed going forward here over time because the supply chain is ramping up, right? It floats all boats when somebody's making an electric air conditioner for somebody that's going to do, 1 million gasoline trucks. but it's an electric air conditioner, so we get to use it as well. So even gas trucks don't like to have a fan belt with a compressor on it anymore, like the old days. So all of the supply chain moving towards electric, as it starts to become more and more kind of generally known that everything, now that the number one vehicle in the planet is going electric, it just moves the needle. So we try to control everything we can that's unique to us, but we buy a lot of stuff, and even the cells, of course. I think everybody's aware that cells continue down. We're working on our own cells even, and lots of people are working on their own cells for 3 or 4 years down the road. And they're just coming down. They're getting safer, they're getting more dense, and they're coming down in price. So everything's moving directionally the right way. I've been in businesses where things are moving the opposite way, but here, price-wise, quality-wise, the number of choices we have in some of the components, everything is moving directionally correct. I mean, electrification of trucks is happening in America.
Don't forget, Harry, those numbers you cite were pre-COVID, so it's really not apples to apples to where we are with the industry-wide supply issues. So comparability is difficult at this point.
Yeah, but you have to hope that's going to level out.
Yeah, it's going to subside. Yeah.
That's going to subside.
No, totally. I mean, so at a high level, then maybe the bomb's a little bit higher now. Do you think about the mid-decade bomb materially different from that 37,000 number that you've given pre-COVID, since it does seem like since sort of pre a lot of these issues?
Yep, mid-decade, of course. Again, what we're doing with our motors and our power electronics that run those, the big costs in an electric vehicle are the drivetrain and the battery, of course. Everything else is, not too far from a conventional vehicle, especially now that conventional vehicles are using things like electric, air conditioners. So I think it's going to be better than we forecasted, but that's just kind of globally looking at the way the world's going. Again, what happened last week really changed. That was a watershed moment. We think it's just going to be 2 full-size electric trucks for a while, for years to come here. And we're right with them competitively price-wise. So the temporary increase from COVID, and everybody, even gas vehicles, all increased their prices this year. So we think that'll subside over time. We don't think it's going to have a long term. But I think a much bigger driving force than that, the temporary issue of that, is these Tier 1 suppliers, there's just more and more of them, and that creates a horse race, and they're competing on price. We're doing as many electric vehicles as anybody in the truck space. So the old model where somebody was making 1 million gas vehicles, but they're making the same number of electric vehicles than us, it levels the playing field a lot.
Yeah, no, understood. That's helpful. And if I can just ask one more, obviously the cash burn's picked up a bit this year. Can you potentially provide some color on how we think about free cash flow break even, just in terms of units, or how we think about where volumes need to go for the company to start generating free cash flow, given the cost structure, given everything that's going on right now?
Remember, to keep this, Harry, this is Carter, to keep this in context, we do believe the phenomenon with the supply chain is temporary. So, we're not ready to give an update on a specific break-even target, but we don't think it necessarily differs from what we'd originally thought going into plan, because we believe this will subside.
Okay, that is helpful. Thank you for clarifying that. That's all the questions from me tonight. Thanks, guys.
Thanks, Harry.
Thank you.
Thank you. Our next question comes from the line of Adam Jonas with Morgan Stanley. Your line is now open.
Evening, everyone. First question is regarding pre-orders. I believe the last update was in January, early January, when you shared the over 100,000 pre-order milestone. Can you provide an update of where we are today?
Yep. Hi, Adam. This is Steve.
Hey.
I think we articulated that was a nice round number, and now that the betas were out, we've stopped at that 100,000, and we are converting folks over to what we call now vehicle purchase agreements. I think last time we announced we had 20,000 of those or so. That's up to north of 23,000, I think. These, although still can't be orders because of, we don't have the vehicle done and through regulatory yet. You're not allowed to take orders. But they have a lot stickier things. Some of them have down payments in them as we get close. When we got to start spending the money to make the vehicles, we're demanding down payments, things like that. So a lot more teeth than the old days. Tom Canepa's telling me I'm a little low on 23,000. It's really around 30,000.
And those that around 30,000, they do include some form of a down payment, or some of them do.
Most of those, all the new ones do. And when we get, I think it's when we get 90 days from building, right? Then down payments due, right? That takes the onus off of us to buy those parts ahead of time and more of a conventional model.
Okay. And just a final one for me, Steve. It's a question on providing adequate capital to the company while recognizing the strategic value of your assets, the plant, your tooling, your market position, right? The time to market, all the things you mentioned.
Mm-hmm.
So I guess if the goal is to add ballast and resilience to the company so that you can ramp efficaciously and be a strong financial partner that your commercial customers would really rely on you to be to see them through, right, for these work trucks. Would you consider strategic alternatives, including potentially a sale of the company as a mechanism to bring that capital in and crystallize that ballast?
Good. Well, it is. We're in a very capital-intensive business. We think we do a great job of trying to do this for the least amount of capital of anybody that's ever tried this before. And again, getting to the milestone of crash test, you just don't see the 50 vehicle companies that have gone before us that didn't make it. It's not because there wasn't demand for their product. It's because they couldn't get this far. So I don't think we've ever considered selling the company, but we are in discussions with a few large strategic investors that, of course, would bring something a lot more than funding. But we do want to be known as obviously it helps float all boats if we are strong financially, right? So somebody buying our trucks knows we're going to be here to service them. Somebody realizes we've got the wherewithal to test these appropriately, which we have with or without financing. We're not putting anything out that isn't. We're really bent on 5-star, maybe the safest pickup truck ever into the wall, and enough durability testing that we're all confident of how good this is. And as we start to get folks like the Army looking at it, it's starting to be apparent that the hubs motors are very, very good. 4 motors, of course, is always better than 2. And so the superior traction thing we have, the simplicity we have, we're starting to get, now that we're at beta, we're getting people that are starting to realize what we're talking about here. And so, we continue to evaluate the strength and what capital is available to us. The ATVM, for example, I think it's fair to say this is just my personal feeling. There would be no Tesla if they didn't get that early ATVM loan, right? And it was a big one. And they paid it back early, and it's a huge success for the ATVM program. And that's the best money you can get, right? It comes with the pedigree of the DOE, doing diligence on you to make sure your technology and your market and your everything is good. And it's a very good price of money. There's other things out there not as good, but, we, in addition to, obviously government vehicles are going to start going electric. We want to be and government buys a lot of trucks. We want to be right in there. And there's a lot of, obviously the $7,500 tax rebate instantly is great for our customers. Carbon credits are a great way to get us off the ground. But there's a lot of government help as well. So we're investigating all of that constantly, evaluating it.
I mean, Adam, just directly, right? So we have no intention of not being an automotive OEM. There are a lot of ways we can take the facility and different ways we can monetize it, but right now our plan is still to be an automotive OEM, but we will do everything possible to maximize shareholder value. and we'll look at all opportunities. But right now, the plan is to remain to be an automotive OEM.
Yeah. And Adam, I think of all people, you probably, we feel like there's nobody going to come to market soon with a full-size electric pickup truck, right? So there's no small companies coming behind us. We had a big announcement last week that brought the whole thing mainstream, right? The number one vehicle is going electric. The other people that make gas pickup trucks have not, shown their cards yet, timing-wise. So, to sell when we're going to be the only two electric full-size pickup trucks on the market for quite some time, no, selling is not anywhere in our vernacular.
Thanks, Steve.
Okay, man.
Thank you. Our next question comes from the line of John Lopez with Vertical Group. Your line is now open.
Hey, thanks very much. I had two, if you don't mind. The first one, I'm hoping you could maybe just level set us, because there's been like a bunch of changes in the metrics you guys have offered these last few months. So number one, what were you viewing as the prior 2021 production target? And the commentary you've made today about production, is that only in a scenario where you're unable to get funding? It sort of reads like you're cutting production, but then you also introduce these caveats. So could you maybe just talk about those couple dynamics for a sec?
Sure, John. First and foremost, we would just want to be clear, and maybe we weren't super clear. We are, we're saying, look, if we don't get any funding, which is not in our, thought process, but if we don't, it's always good to know worst case, we might only make half of what we were going to make before, right? Obviously, we don't want to do that with a strong appetite by customers for this vehicle, and to be, again, we're really, first mover advantage has proven to be very, very important in new technology like this. So we intend to bring capital in one or more of the various ways, and strategic is really attractive to us as well. But we fully intend to capitalize ourselves such that we can make our milestones. And just to refresh you, for 2021, we are at 2,200 vehicles, 2,200 Endurances. The van won't come online till next year, and so we're only talking about this year for most things. So in simple math, we're going to be about 1,000 if we don't get any funding.
Okay, understood. But sorry, just on the other side of that, if we see an announcement from you in the next little bit that you have secured funding, then we just sort of instantly assume you're back to the 2,200 figure?
Correct. Yes. Correct.
Okay, gotcha. That helps. And then, sorry, just as an adjunct, I guess, to that, do any of these perturbations in maybe the second half of this year, do they have any of the knockoff effects onto what you were anticipating to produce for like 22 or 23?
I'm not quite following you there, John. I'm sorry.
Oh, I'm sorry. I'm just asking.
Yeah, I'm sorry. Volume target for next year, John?
Exactly. What I'm asking is, if you make any adjustments to your 2021 production, does that knock off to what you could do in 22 and 23?
It really depends on the timing of the financing and how quickly we can secure. We're not ready to update 2022 numbers right now, and until we go and check out those different sources and opportunities and see what we can potentially raise, and then we'll update you as soon as we, in short order, and let you know what we think we can secure, and then give you a more robust 2022 forecast update.
Okay, understood there. Thank you. Sorry, the second bucket, my second question, I guess that was all kind of one question. The second one is just, and I guess you were asked this a little bit before, maybe I'll try it this way. Given how far above where you thought 2021 spending was going to land, can you talk to us even just directionally about what 22 and 23 spending look like? Have you front-loaded significantly more of what you expected over a multi-year time frame, or is this kind of a new base from which we have to think about the next few years layering on?
Good. I'm going to let Rich jump on that, but just as an example, right, we're building a huge battery pack facility here, right? And we've said, I think it's going to be second largest in the country when it's fully up and running. We're doing that in anticipate, because you just can't move quickly, right? So let's say we get the funding and now we say, okay, now let's do everything we thought. Let's even, do more than next year if we can. So we are continuing to keep our powder dry. We're trying to, I think that's a question you're asking. The increased spending, we are trying to have our cake and eat it too, that if we have to pull a lever for funding and slow down a little bit, it doesn't preclude us from, doing what we want to do once the funding is there, right? So, or some clarity that we should pour it on full speed. So we just don't want to handicap ourselves if we can. It's not a perfect science, but we are trying to maintain the big stuff with the long tent poles, the long lead items, like building out a battery factory. We're continuing down that road so that we are able to execute in what we wanted to.
So to answer your question pretty quick, John, because of the timing, but
sure.
most of the 22 plant is capacitized already for the 30,000. So the battery, most of the hub motor, the body shop, the paint shop, and general assembly is already tooled for that. Where we've cut back the tooling cost is mostly the body shop and stamping. So we go to more curb sets and soft tools. So we will have to go hard tools, which will be most of that cost. So the frame line and the body shop and the stamping shop is where we have to add the hard tools too. So that'll be where the increase will have to come in 22.
Okay, I got it. Thanks for the thoughts, guys. I appreciate it.
Thank
you.
Operator,
Thank
do
you.
we have any more questions?
Our last question comes from the line of Ben Keller with Baird. Your line is now open.
Hey, thanks, guys, and thanks for going over. I appreciate it. Just on the battery strategy, could you talk a little bit about, you guys mentioned maybe bringing cells in-house and how you're evaluating that decision. My second question is just on competition, going back to some of your earlier comments. You mentioned your truck and someone else's out in the market. And I just wonder how I think you were talking about Ford, but I wonder how you segment Rivian, who's coming to market, as well as Tesla coming to market in that group.
Okay. Yeah.
And then just finally, I guess you probably said strategic 14 times, and so I was just wondering, for what strategic means to y'all. I mean, I think the quick glance would be like an OEM, but should we cast our net broader than that as we think about what a strategic investor would mean? Thanks.
I think you're on the right track there, but it can be many things. A lot of people, are in this business that can help us, in some capacity. And so when we say strategic, we're not thinking, it's not kind of tangential. It's a direct, big thing for us as far as help in addition to money. So it could be many things. It could be engineering, could be, a lot of parts. We have a GM parts deal, which has been invaluable to us. And, we just learned that from that experience, we have learned that, maybe we don't do everything by ourselves. And there's 100 years of automotive out there. And, maybe we should, if somebody's interested in investing in this, could bring more than money. Sometimes it's worth way more than the money. When I talk about first mover advantage and there will only be two of us, I'm talking strictly about a full-size work truck. So Rivian, from what I understand, is a mid-size truck geared towards the adventure market. And Tesla's Cybertruck, we're not sure what market it's aimed for, but I don't think it's for the worker. So that's what I mean by that. And then I'm going to let John Vo here kind of talk to you a little bit about our battery strategy, if that's okay.
Thank you very much.
Yeah, this is John Vo. For the battery cell, we conducting research and development on that, just like any other serious OEM would have to do. You look at a story from Tesla Motor. They have all this strategic partnership with Panasonic, LG Chem, Samsung, and pretty similar to them. We have that, but at the same time, and anticipate what the supply demand right, in the future. And everyone know that the demand for the battery is out much higher than what the supply can produce. So we anticipate that we're not going to be exception to that. So that's why we have to anticipate some of the shortage, and we starting the research now so that down in a couple of years down the road we don't have a problem.
Okay, got it. Thank you, guys.
Thank you, Ben.
Thank you. There are no further questions. I will now turn the call back to Steve Burns for additional remarks.
Thanks, operator. And I really want to thank everybody for, I know we went a little over here, but this is a car business, and it's, we're a startup car business, so it takes a little while to explain. I think from our point of view, from management's point of view, of course we don't like cost overruns. We don't like supply chain that's bouncing around a bit, but that's just part of this business. What we are extremely excited about is strong demand for our product, and it's been validated now. Last week's announcement was basically our truck at our price point, and that's a big move to take the number one vehicle in the country and turn it electric. So really, we to be this close to production, to be first in that highly competitive marketplace, I hope everybody can appreciate why we're so excited. Imagine entering into the U.S. pickup truck wars, right? It is fiercely competitive. We are coming in with a 75 mile per gallon, essentially a pickup truck that gets that kind of fuel economy. So that's a game-changing moment. So if I were watching us and trying to figure out if we are on course, as we navigate this, to be this close, again, our guesses are getting better as we get closer to production. Since we're cutting new teeth here, a new path that nobody's ever cut before, we think we've been relatively close. And the crash test, right? If we had been really sideways on that crash test, it would set us back. So that is, to us, the largest gating element. We have passed it, and so I think that should help dial in, what's the execution risk of us actually getting there. So I want to thank everybody again for being on the call, and we'll talk to you soon.
Thanks, everyone.
Ladies and gentlemen, this concludes today's conference call. Thank you for your participation. You may now disconnect.
All right, ladies and gentlemen, so that concludes their call. I'm now going to be taking any questions that you guys ask in the chat. Yeah, sorry about that. I couldn't find the tab. I'm sorry, Eek. Yeah, okay, so I'm super excited, and I'm going to go back to this, what I was writing down. But it seems like they're bringing everything in-house, which, yes, everybody's going to knock on them because they have, high R&D or high costs of expenses. But they're bringing in battery packs in-house. They've said that no human is going to touch it the whole way through, and they're going to get those robots up and the line running soon. And motors, they're building out a line that they're testing and approving with their partner, Elaphe Propulsion. And their paint shop, they're bringing that online. And they already have 4 stamping presses retooled and operational at this time. Those are really expensive. I talked about that a little bit. It's really hard metals that you have to mill down very precisely, and it gets used over and over and over, and you can't really afford a mistake, or you have to retool the whole thing. So very expensive. Awesome to see that they have most of this done. They're bringing it all in-house, very vertically integrated, similar to a Tesla, and now they want to bring in battery cells in-house as well, which in the future is going to be awesome for them. They get their cells from LG Chem and Samsung, so they have more than one provider. I actually believe they have 3, but those are the 2 big ones. They said their van prototype is going to be unveiled this summer, and that their pre-orders, the 100,000 pre-orders that everybody was knocking, Hindenburg was like, they're lying about their pre-orders. Well, they're now getting down payments and actual verifiable money from it. So as they get into production and they get their vehicle validated, they're going to be able to convert those pre-orders with the down payments into actual contracts that sign the vehicle off. So as we get into, I believe he said July, that's going to be huge, and it's really going to validate this OEM. And that's right after Lordstown Week, after they show that they have a factory, a vehicle, and let people test drive. Okay, so I'm going to answer some questions. Alan Munn Jr. says, isn't GM backing Lordstown? They are. And in fact, they are sharing, not only are they invested in them, they're also sharing their list of tier 1 suppliers. That means seats, the console, the carpets, the lights, the cables, and a bunch of other things within the truck. Everything except the chassis, the paint, the outside, and the motors or batteries, they can get from their tier 1 suppliers. And getting those contracts and those partnerships are huge for an OEM. So it's awesome to see that they really just kind of jumped over the fence. They got a factory and they got that list of suppliers very early. All right. Next. Let's see. Nev Zen says, I think Steve is trying to say that the Tesla truck is too ugly to buy. No. So the thing with commercial fleets, and you can see that a lot of fleets actually own like the Ford Ranger, is they need like some form of look. And they said that they were partnered with, I forget what group it was, but basically somebody who does like decals and like paint jobs and like puts security equipment and lights on trucks, perfect for fleets. So to see that they have that partnership now, that's just the next step in like some approval that they will get some kind of commercial thing rolling. Now next, find the best battery of your motor and build a option. Yeah, Big Duckcat says it's Ford and Lordstown in the work truck market at this point. I can't understand why GM is missing it. They actually did say that they're going to have a Chevy Silverado, I believe in 2023 though, and this is just like a suspicion that I have, but I wouldn't be surprised to see Lordstown Motors get bought out by GM. Now, that probably wouldn't be better for Lordstown Motors investors. However, that would be a really quick buck. The stock would surge. You'd make a lot of money quickly, and then you could deploy it into other places in the market that are beat down. So I wouldn't be opposed to that, and it would also give them a lot of boost, capital, and like a big name behind them to really validate their truck. Now, as far as the Ford versus Lordstown thing, I made a video about the Ford F-150 versus the endurance truck, and since then, Ford has actually changed the price target that I was like making fun of them for, which is now $68,000 for their base model for the F-150 Lightning. And that's not considering like you can see that here, like a week ago, it was $40,000. So they basically straight up lied about that. Okay, maybe they didn't lie. They are working on a commercial model. However, they're writing this in like on different pages in tiny font. And like, that's just misleading at best. So, and you can see that now their upper range is 110,000 as opposed to what was previously a lower range of 53 for the XLT and 90 for the Platinum. And you can see that now that's a lot higher. So I think for their commercial release and like the unveiling of the vehicle, they really, kind of tried to make it look good just so everybody shared that headline of $40,000 F-150 that's better than the Lordstown, because then they touted their range of 300 miles, even though you have to buy the extended range. And then they talk about their towing capacity of 10,000 pounds, but that's again with the like towing package and the extended range. So you're going to have to pay however more dollars for that, and it's probably going to be, and they said it's either with the XLT or the Lariat. So that means you have to pay the price tag of $68,000 for the XLT, pay the extra for the range, pay the extra for the towing, and with all that said, they still have individual rear wheel suspension. So that means that it's not good for towing. Usually, all F-150s up to this point have had some kind of rear axle for the towing. And to see that now they have individual on an electric truck, and they're just using that F-150 name and talking about the towing, I think they're really misleading people that are going to purchase this name. And I mean, I've had this problem with Ford for a while, like their Mustang that they put out. Great vehicle, don't get me wrong, but it's much more of like a Model Y than a Mustang. They only put the name Mustang to really get that like consumer attention so people would buy it, but otherwise it's not a two-door, it's a sedan, or sorry, it's not a coupe like the normal Mustang. It's got like a wide back. It's not a Mustang. And now they're doing the same thing with the F-150, calling it the Lightning, which is a callback to a previous model they had in like the early 2000s. And that's simply just to get the name out there. And then they lied about like the price tag, and now they changed it. I'm just not a big fan of Ford right now. I mean, don't get me wrong. I'm sure the F-150 is going to be a great truck. It's Ford. They have a great name. They've put out good vehicles in the past, but they don't have the best history of reliability. So next, oh, me? Did I say? You quoted USD, but showing Canadian. Is that what that is? No. I'm seeing this, well, I don't know. I'm seeing this in dollar. Because by my location, it would show it in US dollar. But I'll look more into it, and I'll make a video on this. See if I missed anything. Next, you went onto Ford website and can pre-order for 40,000. So I don't know what website you're looking at. Well, I don't know. I'm on the Ford F-150 Lightning, and you can see here. Here I'm gonna do Seattle. Why not? So let me do it. Nope. Okay, another problem though, you can see down here it says MSRP starting at 68,000 for the well-equipped mid-series XLT. So I don't know. I guess maybe that's with some of the packs and the, like the extra range and stuff. But that's still $70,000 versus 50,000. You can see they have the XLT. They used to have like the commercial model, and that was the 40. Oh wait, you can't see my screen. What? Can you guys actually not see my screen? Let me know. Oh, I'm on a Canada website? How did that happen? Oh, I see. Ford. Gotcha. You guys are the best. That changes everything. I was getting pissed off. Okay. Is this still Canadian? I don't know. But anyways, even like that blunder aside, the Endurance is still considerably cheaper, and the towing capacity is the same. They can add more battery packs. They have better range for the base models. It's just cheaper, longer range, same towing, higher horsepower, and for just that cheaper price. And they have the same wheel diameters, so you can't really. Okay. So next. People saying a buyout is coming. It's possible. It's not ideal longer term because this is such like an undervalued company compared to, other auto manufacturers at this point. But that's because people are pricing in some kind of, fraud. Literally, Stephen Mark Ryan from, what's his name? Solving the Money Problem. I love his channel, and he's great, and he gives great insight on Tesla. However, he hates Lordstown Motors, and he put a tweet right as the stock was falling after earnings saying, haha, look, Fraudstown Motors, and then he talked about like how they're having financing problems, which is not the case. No debt, $600 million. They're applying for an ATVM loan, and they're talking to large strategic investors. So that's just kind of like the nature of the media right now. But yeah, honestly, the look of the Lordstown Endurance, it's going to be subjective. I think a lot of people are going to go for the Ford F-150 name. However, to see that they converted a lot of their, oh yeah, this was the thing for the vehicle outfitting that they're now partnered with. So you can see they can get cages, bars. They can do the outside, the decals. They've got the emergency lighting. But yeah, just ask me any questions, and I'm going to begin to wrap up this video. And I'm going to be putting out, I think, later tonight, some kind of video just going over this earnings, talking about the last, just like all the information, the comparison between like the F-150 to the Endurance. There's just a lot of things. Because like even Ford is going with the dealership model, which means that the dealerships are going to do exactly what they've done with the Mustangs, which was they know that there's a lot of pent-up demand for the Mustang, so they actually upcharged dramatically on each car. And they're going to do this for the F-150 too. So that price tag that you're seeing, that's before it gets to the dealership. So if you're getting your truck from the dealership, it's going to be upcharged quite substantially, just like what happened to the Mustang. I'm not making that up. You can look it up, or just, yeah. Do you foresee any software issues with Lordstown or Ford with their EV trucks? I'm not sure exactly what you meant by software issues. I was kind of worried about the computers controlling the hub motors, because there's basically a computer controlling each motor, so true four-wheel drive, and that like really controls the torque, or what's called torque vectoring. So the Baja race was a big thing for me because that's like the ultimate test of that software, and to see that it kept up very well, that brings me, a lot of, I guess, confidence. But if you're talking about like potentially the infotainment system, they're getting that from GM, so it's a very similar like GM infotainment system, like the dashboard. So I think there's no issues on that front because it's gonna be the same as the Chevys. And then the semi chip shortage. So that's well, I don't know if you're asking if they're going to be facing that chip shortage, but it seems, well, literally what he said, that they bought enough chips for the full first year of production, which the full first year is not 2,000 vehicles. It's actually 32,000 vehicles, not counting 2021. So that means that they have enough chips at this point for 32,000 vehicles, and that was based off their, their projections before they curtailed recently. So it doesn't seem like they're going to be facing any chip issues, and by over a year from now, I don't expect there to really be as many chip issues because like everybody's scaling stuff up. Nvidia, AMD, a lot of money's going into Nvidia. Intel's building a new factory. Just everybody's really paying attention to this shortage and how it's affecting OEMs. So I really think this is a big move, and I know everybody's been hating on the management team, but to see that they went ahead as a startup and contracted enough cells for what they called the foreseeable future, and then said that they have enough chips for the first full year of production, that just shows how responsible they are. They're willing to like put a dent in their image, which is the balance sheet, for that certainty of getting vehicles on the road. So they said that like worst comes to worst, they don't get any funding. End of the year, we can still expect up to 1,100 vehicles on the road, which is 50% of their projections of 2,200. And then Big Duck Cat. Ford has thousands of new trucks without chips in parking lot that you can see from space. Yeah, that's a little unrelated, what I'm about to say, but Ford does have like thousands of trucks literally sitting in dealerships with chips that are just like sitting there, or the empty ones, and that's why they really like cut back their expectations for Q2. I'm not sure if I'm going to be able to find it very well. Ford Q2 expectations. Just misspelled everything. Ford expects to lose about 50% of its planned Q2 production, up from 17% in Q1. The chip shortage may not be fully resolved until 2022, warned Ford, which expects to lose 10% of planned second half of 2021 production. Half of the planned second half of 2021. So that's more than just Q2. That's also Q3 and Q4. So to see that Ford is having all these issues, but Lordstown Motors actually went ahead, and because they're smaller and they put out way fewer vehicles than Ford, they were able to schedule for what they think is the first full year, which is going to be 2022, 32,000 vehicles. NVIDIA, Intel, AMD, all these conductors are actually scaling this up right now, and Ford themselves are saying they don't expect it to be fully resolved until 2022. And even if it's on the very back end of 2022, by then, Lordstown Motors, they'll be running out of the chips that they have on hand. They'll still have some, and they'll be able to go in with their tier 1 list of suppliers from GM and get those parts. So I'm super excited. Thanks, Big Duck Cat. Or Duh Big Cat. Sorry, I've been mispronouncing this whole time. Chip demand will fade away as soon as chip manufacturers ramp production, which I think is second half of 2022. Yeah. And of course, Jason Conroy. This was my first, live stream, so I'm sorry. I was dealing with a lot of issues. Turns out I can't talk in a mic and have the sound going at the same time. That makes sense. I'm sorry about that. I'm going to get all that figured out. I took some notes. I'm going to, review that and get some kind of system so that I can mute myself, turn on the sound, and get all that solved for the next earnings call or the next time I live stream. So, yeah. I don't know what's going to happen to this stock, honestly. I think we're already pricing in fraud. We're pricing in just like a failure. And to see that that this stock is this low, valued at almost half the value of just the factory, not even talking about the cash, none of the partnerships, I'd want to be able to say like, hey, this company's done, they're not going to succeed, but like everything they're putting out is just so good. Like they have all their partnerships, they have enough cash, They're getting more cash because they don't want to go into debt. Keep in mind, companies can go into debt. A lot of companies already are on debt. So like to see that they have 600 million in cash, no debt, but they're still looking ahead, not only by having purchased enough chips and battery cells for the foreseeable future for the battery cells, and that's contracted. So like they're gonna get it for that price, which is the biggest issue that a lot of startup OEMs are facing right now. Like they're responsible, no debt, but they're still already looking for that next round of funding. So I'm sure media is going to come out, like Stephen Mark Ryan from Solving the Money Problem tweeted, look, they're running out of money. It's an issue. But I think that's just, you're not digging into the company. You're not even listening to the conference call. So it just like, it's really frustrating to me because I saw a lot of like YouTubers and people that like I really respected and like I liked their channels just give such incomplete information. Yeah. All right, chat. They look nothing like Nikola, but they got lumped together. Yeah, and it's because of the Hindenburg short report. Hindenburg was the big name that called out Nikola, but hell, they called out Mara, they called out Riot like a long time ago. And if they had actually shorted Mara and Riot by now, like just held their short position, they would literally be bankrupt and gone. So clearly they just like shorted and distorted, took the profits and ran. So it's like they've shorted, I believe, Grow Generation as well, which here, I'm going to look at Grow Generation right now. So, I mean, like, I'm not saying they did a bad job, and they brought up a lot of good points for Lordstown Motors. Like, hey, are you guys going to get this this battery thing figured out? Hey, you guys didn't tell us about the fire that happened. And all these, well, then they ended up telling us. But Grow Generation, see, if they had shorted them after this solid base of consolidation, well, they would have lost 700% of what they had shorted. So, Hindenburg Research, totally viable. So, yeah. Hi from Sweden, Oscar Melgren. Dude, I wish I could go to Sweden. I went to Switzerland, I think a couple of years ago, and it's actually a really beautiful place. I'm French, so I've been to France, I've actually been to Austria, Germany, Czech Republic, Sweden, or not Sweden, but Switzerland, and I'd love to go to Sweden. So that's a little bit off topic. But if you guys have any other questions, let me know real quick. Otherwise, as far as the chip shortages, they're fine. Battery cells, they're fine. They've contracted for like several years. No debt, no or a bunch of cash. They've got all their partnerships. They're getting everything up and running. I'm very excited. I think this was a great earnings call, and I'm going to put a video out, I think, later today about this. But thank you so much for watching. It looks like we don't have any more questions. Thank you for tuning in. The next live stream is going to be considerably better. I kind of had to figure this out on the fly. This was my first one, but thank you so much for watching. Subscribe if you want to tune in for more videos. Obviously, you don't have to. However, 670 subscribers. This is insane. 671. Like, I love you guys. I appreciate this so much. I really want to make a channel that like people can actually come to and talk logically and debate and like without ego, because I feel like a lot of people in the stock market try to be right about things, and I'd love to be disproven because it just like kind of destroys your ego a little bit. You're like, oh damn, I gotta like re-research everything. But I'm really glad of how big this channel is growing, but mostly like the comment section, because you guys, I'm getting so much like feedback in the comments, and a lot of people are saying stuff that I didn't know before. So I'm learning a lot from you guys, and I'm loving the feedback. So I truly appreciate all of you guys. Thank you for tuning in. We are not communist, only 60% tax. Yeah, it's like most of Europe. I think most of Europe is like 50% plus, but you guys have a lot of, I guess, other benefits like healthcare, right? So thank you so much for tuning in. I love the growth of this channel. I love all of you guys. I really appreciate all this. And with that said, I'll see you maybe later today if you watch my earnings call actual summary, but if you watch this, you probably don't need to. So with that being said, thank you and have a nice day. Ooh, end.